Good afternoon. I'm Heidi Thompson, your Legacy Lifeguard with Lifeguarding Legacies, and welcome back to 2021 and our first of the year edition of Monday Noontide. And today I have as my guest Micah Watkins, who you're going to meet in just a minute. I just want to remind you, Lifeguarding Legacies is an estate planning legal firm that helps clients with wills and trusts to make sure that what they've worked for goes flawlessly to the families they love and the causes they care about. So Micah, welcome to the show. I'm glad you're here.
Thank you for having me. I'm glad to be here, and it's a beautiful day.
It is a beautiful day here in Phoenix, Arizona. So Micah, tell me about yourself.
We moved down here to Phoenix almost 2 years ago. June will be 2 years with my wife and my son. 10-year-old, he keeps me busy with all of his activities. We were launching off model rockets yesterday and having a good time with that. And so definitely glad to be down here in the valley.
Perfect. Now, tell me about your business.
So I'm a living benefit specialist, right? I get to work with families and individuals and sometimes small businesses and help people create a foundation of protection to, go through life, giving tools and assets to navigate the curveballs that life throws us.
Very, very nice. That's a great summary. And I like the navigation theme. I think that's exactly right. So how long have you been doing this?
So I've been around the industry for over a decade now. Been around it. I decided last year to venture out and do my own thing and launch my own business. But I've been around the industry for well over a decade.
Fantastic. So tell me, and I know we've been talking a little bit about this, but tell me about this foundation that you work on with people. What's that look like?
So, you've heard of Warren Buffett, right? The Oracle of Omaha. Right? So when he's talking about building a financial house, he talks about how important the foundation is. That's the most important part of building that financial house. And so that's where I like to focus, is on the foundation and creating. When I'm talking about foundation, I'm talking about protection. If we're not properly protected, well, then our financial house can kind of come crumbling down on us unexpectedly. So I like to focus with families and individuals and make sure that they're properly protected in all the ways that they can be.
Okay. And when you say that, you're not talking about like fire and auto insurance. You're talking about something better than that. Talk to me about that.
Yeah. I'm not talking about fire and auto insurance. I'm actually talking about life insurance. Oh, I know I said it. Life insurance. Oh my goodness. Don't go grab the garlic, right?
But you're not talking about death insurance.
I'm not talking about death insurance. And that's why I do what I do, is because with living benefits, it's life insurance that you don't have to die at the end.
And that's important, because I know when I work with people on estate planning, we talk a little bit about, what they've got to live on, what they plan to leave behind. Not in great depth. I leave a lot of that to the other financial professionals in their life. But I know that there's always that concern that like long-term care, if they were to get sick, would be an issue. And, very few people actually can afford long-term care insurance. So the life insurance companies have figured out ways to get creative with that. Talk to me about that.
They have figured out a way. They realize that long-term care insurance is very expensive, and a lot of people aren't buying it now. So they've created these hybrid products. So it's just that life insurance with living benefits. Now you have some of those long-term care chronic illness riders built into the policies as part of like a hybrid, right? So there's ways to use those funds, right, to pay for long-term care should you need it. One thing I know is that people with living benefits, they're filing 10-to-1 claims on their living benefits to just one death claim. So what that shows us is that people are actually using their funds for when they need it while they're still alive.
Right. Absolutely. And that's not the only thing they can use it for. They can do things like run a business borrowing against it and paying themselves back interest, right?
Oh man, this is my favorite topic because, it's just that we're just, I have the greatest job in the world. And why do I say that? Because not only do I get to show people how to have a huge pile of money at retirement, but I also get to show them how to really become their own financial institution. Perfect example, I was on a phone call with a good buddy of mine just over the weekend, and he was talking about, oh man, I'm gonna go get qualified for a boat. And he's down near the water, and he's really excited about getting a boat. And he was talking about, well, I have to finance it. He was kind of going over some of the parameters, and I said, hold on a second. You have some options where you don't have to finance all of it, right? You have this account that you started several years ago, and you have some money in there, and you can actually borrow some of that money at a lower interest rate than what you're going to pay on that boat. So now all of a sudden, you're going to just borrow money that you're already paying yourself. You can buy your boat with it. Maybe you have to finance a little bit of it, but you're going to pay yourself back. You're going to make the payments anyways, right? So now you're going to save yourself anywhere between 4 to 6% interest on paying yourself back and paying the bank. Who ultimately the bank doesn't care about you.
And not only that, the part that he borrowed is really still in the policy, still accruing interest while he's borrowing against it, unlike if you borrow against a 401k loan, right?
Absolutely. So what's amazing about this is that the insurance companies, when you borrow against yourself, they take it out of their own coffers and give you the money. And that's why they're charging you an interest rate. So your money is actually still accruing in those accounts. It's a lot of some of the behind the scenes stuff that goes on. But I don't think a lot of people realize that that's kind of how it works, that's even cooler because now as you're paying yourself back, you're kind of getting to capitalize on double interest in yourself, right?
Kind of love that. It seems like there's just a lot of advantages to this, but I mean, people do need to know it's got some upfront costs. You kind of have to take care of it first, but it's the long game, right?
We are talking about the long game, right? Everything has its price. Well, do you want to have short-term pain for long-term gains? Or are you just looking for that quick fix? I want short-term gain, but when on the short-term gain, there's long-term pain that's associated with that. So yes, like you had mentioned, there's some costs, and usually those are paid up front. But in the longevity, when I talk about the time value of money, we know that a small amount of money, right, over a long period of time can grow to be a very substantial amount. And so it's the same concept, when we're talking about these accounts.
Great. And then it can also be used to set up generational success and legacy. So talk to me a little about that.
So I think we all want to leave a legacy, right? It's just part of us. We want to be remembered. We want to, for the things that we did and how we left our families, no matter how we leave this room. And part of that is just, it's planning. It takes some time to plan and sit down with professionals like myself or, somebody in the financial services industry and see how you can create something that can last not only one generation past you, but generations beyond. And you can really leave a legacy.
Yeah. Well, and what's really nice too about this is in light of some recent changes in the law that have to do with my line of work and leaving things behind for family members, insurance is one of the better vehicles to distribute wealth to a next generation because of the taxation and capital gains on most other forms. And insurance, generally, if it's set up right, isn't taxable the same way that you would be on most of your other kinds of investment instruments. So some real great opportunities for passing wealth.
Absolutely. you know, it's tax-free money when we're talking about death benefits and leaving legacies that way. So it's where you can build an estate, and however you want your estate to be distributed. There's funds though that you don't have to worry about paying taxes on, and it's there for the family. It's there for the people that need to be there, and not Uncle Sam always.
Yeah, absolutely. And I don't know if people really know, but you know, in 2019, the Secure Act was thrown out at us that kind of disrupted my world. And so if you've got a lot invested in your IRAs and 401ks, it's a good time to revisit those and decide if you're going to potentially have a lot of that left over when you pass that you would plan to give generationally. If you think about it, the time when you would likely pass is still the highest income years for your kids. And that's when they have to receive those distributions and be taxed on them, which could mean that they're being taxed at potentially up to over 50% of what they'd be receiving. That's a lot of wasted savings on your part that you could have maybe didn't put in a different instrument, like insurance or a Roth conversion or something like that, to leave a better, less of a mess for your kids. So you have a great option for that.
Absolutely.
All right. Well, let's just say very often people will sit down and they'll do a financial plan and they'll put it in a file at their house and then they just set it and forget it. And that's probably not the best choice. What would you recommend for people?
Do annual reviews. If you have, you know, especially when we're talking about life insurance, we're talking about retirement accounts. It's not always just about set it and forget it. I know some people have that philosophy, but here's the thing: when we go through life, guess what? We're probably going to assume and add additional assets, right? As the year goes on, I gotta have this, I gotta have that. It's just kind of in our nature as we build and grow our careers and our lives. Again, we're acquiring more assets. So sometimes what you had 5 years ago, what you had last year, what you had 10 years ago, it might not be the case anymore. And so it's good to revisit and just schedule reviews, just to have a conversation. I know everyone in my industry, this is kind of the standard practice, is just, let's sit down, let's have a conversation. What are your needs? And we go over that and we address it. And if there's something that needs to change, or we can do an upgrade and get you properly protected in a better way, like I had mentioned earlier, the industry is always changing for the better for their clients. It's good to just have that review. The more informed you are, the better decisions you're going to be able to make.
Absolutely. I 100% agree with that. And with your finances, it really should be at least every year. In my world, it doesn't need to be quite that often. It's every 3 to 5, or with a major life change. You add a new grandchild, you add a new baby, you move somewhere, those kinds of life changes are worth revisiting. But with your financial people, it really needs to be at least once a year. So good advice. Anything else you want to leave people with?
I've had the ability to lead many people in my life, and when you sit down and work with me, you get that. I'm a leader, and I set out to, when you lead people, sometimes it's just one word can inspire them to do amazing, great things and set them on a course that they didn't even ever realize that was the potential in themselves. So I've been in service my whole life. I truly care about people and their well-being, and creating that foundation, making sure that that foundation is rock solid, so that they can go out into the world and they have that confidence and just be able to tackle it.
Perfect. So Micah, how would people reach you if they wanted to reach out to you?
You can reach me at an email address at micah.watkins@newhorizonsgroupinsurance.com. My website is www.newhorizonsgroupinsurance.com. And you can always reach me on my cell at 303-588-2787. 2263.
Thank you so much, Micah. I appreciate it. And thanks for being on the show today. Again, I'm Heidi Thompson, your legacy lifeguard with Lifeguarding Legacies. If you've been putting off your estate plan, check it off the list in 2021 and experience the peace of mind with making sure that your family has a legacy left behind for them. I'll help you through every step of that. I come to you, I make you do no paperwork, and I will make the process much simpler than you think and probably more affordable than you think too. Heidi Thompson, your legacy lifeguard, wishing you a great week, and I look forward to seeing you next Monday on the Monday Noontide. Thanks again, Micah, and have a great week.
Bye-bye. Have a good one.